Medicine and Health Sciences, UAE, in year 2020. Issa is a Thomson Reuters Foundation journalist reporting on illicit finance in Africa. He works as a reporter for the International Center for Investigative Reporting. He is a lead trainer who trains volunteers and edits translations from English language to Hausa, and also a non-resident fellow of the council, Nigerian Global Affairs Council. Interestingly, he is a recipient of the Commitment in the Fight Against Extreme Poverty in Northern Nigeria Award, and has been awarded by the One.org Washington, D.C. in 2018. He was also given an award for countering violent extremism narratives online, awarded by Department of Homeland Security, Facebook, and Ed Ventures Partners, USA 2016. Up next, I'll take Mr. Haruna Emmanuel Umoru. Has over 12 years of experience as senior policy and research analyst at the Department of Economic Growth, Nigeria's Ministry of Finance, Budget, and National Planning, where he is responsible for designing socio-economic plans and policy programming at the federal, state, and local government levels. He represented the federal government as a delegate in several local and international conferences and workshops. Since joining the government think tank plans and policies, he has worked with a number of local and international non-profit organizations on various programs covering health, poverty and inequality, social policy, education, and trade policy issues. He holds a Bachelor of Science, BSc Hons in International Studies from the prestigious Ahmadu Bello University, Zaria, Nigeria, a master's degree in economic policy and development from Korea University, South Korea, and a master's in economy, economic growth and sustainable development, multidimensional poverty and inequality, as well as trade and industrial policies. He focuses more on evidence-based policy research, linking research outputs to effective policy program implementation and evaluation. He is a member of Mandela Washington Fellow for Young African Leaders, a fellow of Yali Regional Leadership Center, a policy fellow of Nigerian Global Affairs Council, and founder CEO of Development Preneur Hub. He is a scholar of Korea International Cooperation Agency and Japan Government Scholarship, MEXT. And our resource person, Mr. Aka Gali, Senior Manager, Transfer Pricing Services. He holds an MA Taxation from University of London, United Kingdom, BSc Accounting at Crescent University, Abeokuta. He is a associate member of Institute of Chartered Accountants of Nigeria, associate member, Chartered Institute of Taxation of Nigeria. Mr. Gali is a senior manager in the Tax Regulatory and People Service Practice of KPMG. He has over 10 years of experience specializing in tax and transfer pricing. His area of expertise in TP, advisory, planning, and specialization for multinational enterprises, TP documentation and compliance services in the oil and gas, consumer and industrial market, and financial service sectors, cost contribution arrangements, and TP audit support. Gali has managed several TP planning, advisory, and documentation engagements for clients in various industries. Some of his major transfer pricing planning and documentation engagements includes a leading Pan-African bank with operations in over 36 countries, one of the leading Nigerian headquartered bank with presence in over 12 countries, including the UK, an asset management and real estate group with presence in Africa and Europe, a multinational oil and gas exploration and production company, a listed manufacturing company, a leading multinational food and beverages company. Gali has worked on due diligence engagement with respect to target companies in the oil and gas sector. He has advised clients on TP efficient models. He has also co-authored a couple of TP articles in globally recognized tax journals, more recently on the implication of the base erosion and profit shifting actions on the Nigerian business environment, and on the uncertainty regarding transfer pricing and country-by-country reporting in Nigeria. Gali is also the lead specialist on country-by-country reporting compliance services in KPMG. Wow. At this point, I would like to just down my hands for the quality of persons we have joining on this conversation today to discuss the implication of VAT domestication at the state level to the federal government. I mean, everybody here on this conversation will bear with me that this is actually a very burning issue considering what is going on in the country, even though it's in court, but we're just trying to share ideas and have a discussion around it. So quickly, let's drop in our questions and comments in the chat box area while we start the conversation proper. Once again, my name is Abraham Onoja. I am the moderator of this session and policy fellow for the Nigerian Global Affairs Council. So quickly, how we would run this is would allot 10 minutes to our panelists, and then we'll allot another 15 minutes for Mr. Gali. So we'll take it just like I read out in the citation, first from Mr. Ali Isa Musa. Mr. Ali, are you here with us? Ali Musa, I can see you're with us. Can you unmute, please?
Yeah, I can unmute, but unfortunately, I would have to apologize. Where I am, the network is like so poor, so it might not be good for this for video. So if I can go audio, please.
Okay. Okay.
All right. I'm with you guys, and I will say good day, everyone, and good day, everyone. Good day, Abraham. Good day to all the people that joined, and good day to my mentor, Elder David. So I'm going to be sharing my screen, if that's okay with you.
Yeah, please go ahead.
Okay, all right. Document. Then yeah, it's going to be in VAT domestication. Okay. Are you with me?
Yes, I am. Clearly, I'm with you.
Okay. All right. So I'm trying to locate the file. Oh, I sent it to. Jude, can you pick it up from your own end? Hello, Jude.
Are you able to share from your end, Ali?
No, I'm trying to share the document. Okay, let me pick it up from my Google Drive. It seems this thing now. Okay, I click on share, then go to documents.
Yeah, you can click on share screen. Yeah.
Okay, let me just share the screen automatically. No need for me to share the document.
All right.
Because what I'm seeing here is just what I'm. Okay, can you see my screen now?
It went off again.
Okay. I'm trying to locate this in the document earlier. I shared with this thing with Jude. If Jude can share it from his own end, because the device I'm using, it seems it's not taking me to where
Okay,
I
so
say,
let me give you some time to quickly sort that out. Just give
yeah,
me
okay.
some. Yeah, so I would like to take quickly Mr. Emmanuel Haruna, who is with us. Mr. Emmanuel, are you with us?
Yes.
Wow, so good to have you here, sir.
Yeah, nice to see everyone.
Thank you so much. How are you doing today, sir?
Yeah, I'm good. It's just that it's actually getting late over here, so it's to 12.
Oh wow.
Yes. So I was thinking maybe they will start with me, so that let me quickly. Okay.
Yes, sir. So we just hit the ground running with you, sir.
Okay.
Yes, please.
Yeah. Hello, everyone. Good afternoon, good evening, or maybe good morning. So it depends on wherever you are.
From wherever we're joining from all over the world.
Exactly. So my name is Emmanuel Haruna. So I wouldn't want to spend much time because all the detail has been, my profile has been also been listed already. So I will go straight to my presentation. So my presentation, I'm just looking at the evidence, empirical evidence. I'm not dealing with qualitative research or maybe opinion, right? So my topic is, so I'm looking at the review of the impact of VAT on economic growth. And I would like to also state categorically that I didn't look at development, because economic growth and economic development are quite different concepts, but sometimes they are being interchangeable. Okay, let me go. So the structure of my presentation is like this. So I'll be looking at the motivation, then the background, so with some stylistic fact. I'll also be talking about the research objectives and question, then briefly touch about the theoretical and empirical literatures, the methodologies, data source, result, interpretation, conclusion, and finally, I'll be talking about the key references, right? So
Okay.
the motivation is this. Currently, the tax to GDP ratio is very low in Nigeria compared to other countries. Like in 2018, it was around 6%. And later in 2000, backward, in 2017, it was like 5.7%. And the highest that we had in the past was in 2011. That is 10 years ago. Hello?
Clearly,
yes,
I'm with you.
Okay, so now compared to, because if I'm doing comparison, people look at it, looking at the countries. Okay, I don't want to compare with smaller country like Mauritius, like Botswana, with few millions. Then let me compare with South Africa, that we almost have like twice the population of, we have twice population of South Africa, right? Or maybe 3 times. Then in South Africa, like the rate in terms of tax to GDP ratio is around 25.9% between 2017 and 2018, right? Now, the question is, tax is increasing virtually every year in Nigeria, but the impact on those economic development is actually lacking, right? And taxpayers, so you find that some developed nations, you will see how taxpayers are enjoying to pay their tax, right? So, but in contrast, in Nigeria, a lot of people don't want to pay tax because a lot of them are evading tax or maybe avoid paying them. They don't see the reason why should they pay tax. Then another issues that motivate this research is about the cost of tax itself, right? So it's like, it's very challenging to tax authority. You find out that even the FIRS, they are contracting this collection of VAT to some companies, right? Relying on the third-party collection agencies. And this type of behaviors is like, so it has been called to question, right? In terms of the effectiveness and efficiency of tax in Nigeria. So as a result, this review is very timely and worth exploiting. Now, I talked about briefly about economic growth. Economic growth and economic development are two different concepts. One talks about the GDP in terms of how a country, the productive capacity of a country, that is the GDP. Then the economic development talks about the well-being in terms of quality of lives of the people. What enriches life, what protects life, what sustains life is what we call economic development. And sometimes they are used interchangeable, right? But VAT, so we're supposed to understand the concept of VAT. So VAT in terms of consumption tax is collected at any distribution production chain, right? So as it is called a multi-stage tax imposed on the value of added to goods and services as they pass through various stages of production and distribution, as well as on services as they are rendered. So according to Okwe, right? But the most important thing about VAT is that the burden is totally shifted to the consumer. But VAT, in terms of the origin of VAT, VAT was introduced in Nigeria via Decree 102 of 1993 during the military era. So and then it replaced the sales tax Decree number 7 of 1986. And since then, VAT has significantly contributed to resource mobilization and the consumption tax that is quite easy to administer, difficult to evade. One thing I want to make it very clear is that very difficult for people to evade tax, VAT, because it deals with consumption. So it's been administered at that point of production and at that point of consumption. It's very difficult for people to evade tax. So that is why we can see that the VAT, tax VAT, continuously to impact on economic growth. But in terms of empirical, like I said, I mentioned very clearly, I'm not discussing political economy of VAT. I'm talking about evidence, what the data says. So in terms of empirical research, a lot of scholars have found out that the relationship between VAT and economic growth is positive. Those are the scholars that have been listed there. Now let's go to some of the facts, stylized facts. As you can see, this map of Nigeria. So this is the productivity, that is the GDP. In 2010, you can see all the productive capacity of state relies in the southern part of the country and in the northwest, north central. So automatically, northwest upper side towards my left-hand side and northeast are totally excluded in terms of adding value to the country we call Nigeria. Are you with me?
Clearly, I am with you. Yes,
okay.
I am with you. Yes.
Yeah. So now is that, let's look at this trend, this graph. As you can see, this graph, the story is still the same till today. So this is like, sorry, before then. No. I need to go back. Sorry. This is 2010. As you can see, so in my left-hand side, Lagos State, Rivers State are still topping in terms of GDP, state GDP contribution to the federal marriage. And the least are those northeastern states, Yobe, Gombe, Ebonyi, Ekiti, combinations. Then later on, 10 years later, the story still remains the same, no changes. So sometimes I begin to wonder, how does those leaders in authority came to power? Do they advocate for the kind of productivity, or what is their agenda? 10 years in between, story remain the same. In 2020, just last year, Lagos and still Rivers still leading in terms of productivity. Yobe, Gombe, Kebbi, they're still there on the bottom level. Let's go there.
Interesting facts.
This is GDP versus VAT. So I collected this data from the Central Bank of Nigeria from 2009 to 2018. You can see the relationship between GDP and tax. Tax is increasing 100% every year. Just look at the dot. every year tax VAT is increasing. But the GDP, on the contrary, the growth is not increasing. Then here is like the correlation, the relationship between GDP and VAT, the same time period. As you can see, is positive. No argument that GDP, that VAT contributes significantly to our GDP in Nigeria. Then next, here
Sorry,
is this.
Mr. Emmanuel, I need to remind you, we have 4 minutes more for you.
Okay, yeah. So I'll round up very quickly. So now this is like the subsectoral VAT contribution to GDP. We need to understand which sector contributed highest in terms of VAT to GDP. And you can see in my table, the custom, do you see? And non-import foreign VAT contributed a lot in terms of percentage to the national level. Then here, so what is the objective of this research? The objective of this research is to investigate the impact of VAT on Nigeria's economic growth and share more light whether VAT is judicially used for development purpose. And the questions are this: to what extent does VAT contribute to economic growth? And is there any dynamic relationship between VAT and economic growth? Let's see whether we can answer this question. So these are theoretical bases. One of the good, so I think I need to stress this point, that the theoretical basis of VAT has been proposed under the endogenous growth model, so by Barrow and Salah I. Martins. So since then, all those empirical has also validated this model, this theoretical basis, that VAT play an important role in economic growth. Also, all those are empirical, but the challenge is that based on this review of literature, both theoretical and empirical, Nigerian economy will grow slowly, despite the fact that VAT has a positive effect on revenue generation. Despite this fact, VAT contributed significantly to total revenue in Nigeria by reducing tax evasion by many people. Like I say, very difficult for people to evade VAT. Then this is my model. So the function is growth, VAT, then I control for inflation, because inflation play a vital role in terms of production. So this is my unit test and analysis. So this is to show that all the variables that I use in this model are very significant at level and phase difference. And this is a co-integration test. So most of the sectors, so the total VAT, agriculture, you can see, total VAT, agriculture, manufacturing and utility, manufacturing, transport and communication, trade and hospitality, the co-integration in terms of the long run analysis within the bound, we found out that total VAT, yes, it is being co-integrated in the long run, not in the short run. Why manufacturing, mining and other utilities, yes, there's co-integration. Trade and hospitality, also there is co-integration, the relationship between
1 minute more, sir.
Okay, so let me just round up. So now, so the most important thing is this. You can see, so in the estimation of the result, we can see is positive. VAT contributed significantly to what? To growth. Then other sector, we can see mining and manufacturing also contributed. All those ones are long run result. Why this one is a short run result? But in the short run, we can see the manufacturing, transport and communication also have significant result. These are like the tests for the diagnosis test to check whether my model speak for it. And these are the stability to check if my model that I use to generate my result is okay. These are the model. These are the stability tests. Yes, and in conclusion, so I'll round up here because I'm left with 1 minute. So this study investigated the relationship between VAT and economic growth in Nigeria between 2009 and 2018. And the findings are very clear. VAT, mining, manufacturing, utility significantly impact GDP in the long run, but in the short run is totally insignificant. And on the other side, trade, hospitality significantly impact GDP in the short run, but not in the long run. So in addition, manufacturing, transportation, and communication have significant impact on GDP in the short run. The recommendations are this. First, the government should put in place adequate measures to ensure that VAT revenue is effectively used to develop and grow the economy through proper, infrastructure development. And the next point is that double taxation between VAT and sales tax should be totally discouraged. Third, digital technology is also important for us to eliminate this waste, and some of the corrupt tax officials also be called to order. And finally, to have a significant impact on economic development, VAT should be restructured in a way that it taxes the rich more while exempting more items consumed by the poor from the VAT. So like a kind of middle class economy, and that is what is obtainable in every way. So these are my reference. Thank you for listening.
Wow, this is fantastic, sir. Thank you so much for that very detailed analysis. Thank you so much for your time, sir. Quickly, okay. We're really trying to catch up with time. I'll quickly take Mr. Ali Musa. Are you ready for us now?
Yeah, I'm ready.
Oh, fantastic. You have the floor, sir. 10 minutes.
Okay, all right. So for the, if everyone can see my screen.
Yes, I can. I can see your screen. Yes, please.
All right. Okay. So thank you, Doctor, for that, the empirical this presentation that you made regarding the VAT. But on my own side, I am going to be, my presentation is going to focus on the socio-economic and the political implication of this VAT domestication at subnational level, which are the states. So as we can see that this does the definition of VAT. So we normally, VAT is just a consumption tax paid on all goods and services provided or imported into Nigeria. So Doctor has already discussed about that. So I'm going to skip the slide. So the thing is, there's a court judgment by the Federal High Court in Port Harcourt, Division 9, that said that from that particular day on, that River State should, the Federal Inland Revenue should stop collecting all tax, all VAT. The VAT should be collected, should be paid directly to the River State government. And this led to the political question about the legality of this particular state judgment. Also, Lagos State government joined in it. Then at the end of the day, Lagos was also granted. But the matter, then the Attorney General of the Federation and other people at the economic team came and said that no, it's not going to happen. So now we have the matter at court. So by looking at that, let's see what is going to be the pros of VAT if this at subnational level. Somebody sharing screen again. Hello. Okay. So the next slide, please. Can you hear me?
I can hear you. I can hear you.
Okay. So the next slide, please. Okay, so you can. So now let's see the pros of VAT domestication. So if you say you're going to domesticate the VAT, the tax being charged on consumption. So the first thing that you're going to have is much more money for them.
Your network seems to be breaking, sir.
Like there's going to be much more money for them for grassroots projects.
Okay.
Yeah. So as states like Lagos, and the river states now that they are the ones that suffer mostly in terms of infrastructure. Because if you're going to have any truck, any heavy vehicle that will now move, like trucks and others, the containers that will move from down to the north to go to Lagos, they will still pick products and bring them down to the north. So at the end of the day, if Lagos can pay if let's say Lagos can pay, let's say 15 billion naira per month, and at the end of the day, they will be given less than that as part of the contribution that they made to the center, it doesn't make sense. But if Lagos State can keep that 15 billion naira or the 18 billion naira that they generated, and if they are not paying that particular amount of money to the center, then they can use that money for grassroots development. Then also, with that, it's going to reduce the powers that the federal government has, because a situation whereby, let's say, a state will generate its own money, let's say from the consumption tax, and use that same money for the kind of project that they want, I think is going to bring the so much the desired development that is needed as what at grassroots level. Then secondly, it's going to increase regional security, because if you look at, it's going to lead to most of the money that is being generated by VAT and being deposited at the center by states that normally have high consumption, states like River State and let's say other states like Kaduna. We found out that they can still use that money to expand their security network and bring all kind of recent development needed. Then apart from that, also there's going to be the rapid expansion of a subnational economy, because if this money is left for states for them to utilize, if they have leaders that know what they can actually do with the money, they can set up this in cottage industries. Cottage industries, it can be an industry that they can be able to industries that produce things that normally need immediate needs of the people of the environment. It's going to expand the subnational economy of that particular state. Then also, states that normally contribute so much to the center is going to really make these states that have very high performing states to have what is called the special status. Lagos State has been over time been let's say applying to the federal government and even to the Senate of the National Assembly that it should be granted to be a special state, to be granted a special status in the country. So with this being a very let's say one of the best performing states that we have in Nigeria, is going to like domesticating the VAT is really going to bring the much desired development that is needed, especially in terms of infrastructure. Because when it comes to roads and when it comes to issue that has to do with primary healthcare, that money will do a lot when it comes to issue that has to do with development. Then we have
That's
the issue
fantastic.
of creativity and innovation. Then the creativity and innovation is in a way that if let's say if this VAT is domesticated by the high performing states, you find out that other states also is either they become creative and innovative and find ways that they can be able to generate more revenue, so that they can be able to have more VAT. They're going to make them to become more creative instead of just waiting for the federal government to make allocations at the end of the month. So this, I think, are some of the pros that we have for if this VAT is being domesticated. Next slide, please.
Okay, maybe you prepare to round up. We have 1 minute more.
1 minute. Oh, is that really?
Yes.
Okay.
Yes.
So now, so if you look at some of the negatives that we have when it comes to the VAT domestication is that if actually this VAT is domesticated by the high performing states, then you find out that most of the states are going to collapse. Like states like the doctor had already made mention, if money is not coming directly from the center, and because it's what you contribute at the center is what you normally going to get back. And we can see how the prices of oil has affected most of the states. So states like let's say UB, Gombe, Ekiti, and other states, they wouldn't have any if there is no creativity and innovation when it comes to generating revenue, they will have to fold up. Then there's also going to be rural-urban migration, because definitely if there is nothing happening in most of the states, most of the youth in that state will now have to migrate to the states that are viable or the state that are performing exceedingly. Then there's going to be this issue of youth quake, whereby if a lot of youths are there in states that doesn't perform, then definitely it's going to lead to so many kind of vices and other forms of insecurity.
Fantastic.
Next. Yeah. So this is this is the most important slides that we have. So this is the implications that this VAT domestication is going to have, especially on northern states. Most of the northern states that we have, they are what? Most of the northern states are lazy, maybe due to the fact that money is coming every day from Abuja, or let's say end of every month. So they are not keen on what? On this VAT and general revenue generation. A state like Kano, for example, Kano has 17 active dams, but the state government is not utilizing any of them. So, but because the reason why the state is not utilizing any of those 17 active dams is because money normally comes from the center at the end of the month. But if this VAT issue has been domesticated, I'm very sure states like Kano they will definitely will definitely revive those dams, and there's going to be so much issue when it comes to irrigation. Then there's this silicon mining also in Kano. Then if you look at Zamfara State has been mining gold since the year 2002, but they have never remitted any amount this into the federal government, to the center. It's just recently that the CBN governor said that, okay, they are going to be buying this gold, like every month now, Zamfara generates nothing less than 7 billion naira, but they are not remitting anything to the center. It's just the time around that the CBN governor said that, okay, they are going to be buying gold reserves from Zamfara. Zamfara still is not paying to the center, and still CBN is still paying Zamfara State for the gold reserve that they are buying from the states. Then this issue with Kaduna Industries, and also a lot of goods that we have within that region of Binungwari and all that. Most of the states, they are not remitting to the center, just
Sorry,
because
sir.
of what.
We round up now.
Okay, the last slide. Yeah, so I think this is the best way forward. So for us to attain any meaningful development in this country, apart from even this, we should domesticate this VAT. And this domestication of this VAT is really, it will take us to all what we have been all clamoring for. First of all, it is going to lead to the devolution of power. And lastly, it's going to lead to restructuring. Because if all states are generating whatever they are generating, and they are consuming what they are generating, then definitely it's going to lead to the restructuring. So that is the political implication of this VAT domestication.
Fantastic.
All right.
Thank you so much, sir, for your time. It's been interesting and a very detailed conversation from your end as well. Briefly, before I invite Mr. Akagali on board, I'd like to ask everyone to please feel free to drop your questions and your comments in the chat box, and I can assure you it will be addressed and forwarded to the appropriate person at the end of the day. Mr. Gali, are you there, sir?
I'm here, Mr. Abraham Onoja.
Oh, fantastic. So good to have you here with us, sir.
Thank you. It's my pleasure.
Thank you so much, sir. For those who are just joining in, Mr. Akagali is a senior manager in the transfer pricing unit of KPMG Nigeria, and he will be talking to us on the implications of domesticating VAT at state level. Thank you very much, sir. Over to you.
Thanks for inviting me to come and share my views on the program, and I would like to appreciate the first two presenters for the insights they've shared. So I will dive into my own point of view, but before I speak about the implications, I would just like to share some VAT facts and figures in Nigeria for 2020. So based on the statistics gotten from the FRS and the Nigerian Bureau of Statistics, VAT has become the fastest growing tax revenue edge in Nigeria, with about 1.53 trillion generated in 2020. So it's the top spot, it's the number one source of revenue for the government. VAT, based on the amendment, the Finance Act 2019, small businesses with turnover of not exceeding 25 million are exempted from charging and filing VAT returns. Over 500 food items are currently exempted from the national VAT. it will be interesting to know that some big sectors contribute very little to VAT revenue due to the nature of their businesses. So if you look at the banking industry, for example, they contribute about 1.62% because most of their services, fees, and income are exempted from VAT. Then oil market also contributes about 0.63. If you look at the exemption list, petroleum products are also exempted from VAT. So the way the revenue is shared based on the VAT Act, so 50% goes to the federal government, 50% is shared among the states and FCT, while 35% goes to the local government. Then states with highest derivatives are Lagos about 50.5%, FCT 13.2%, Oyo 2.9%, Rivers about 2.7%, then Kano about 1.4%. Amounts shared by top states and their local governments are Lagos about 14.7%, Kano 3.8%, Ogun 3.2%, Rivers 2.7%, the FCT 2.5%. Why I share these facts and figures is for us to appreciate, why some of the states are clamoring for a change in the arm of government that is presently administrating and collecting VAT. We can see the revenue head is the fastest growing, about 1.5 trillion. Number two, based on the level of operations, Lagos has the highest derivatives. So, and economic activities play a significant role in the number or in the amount of VAT revenue that is being generated. However, even though Lagos is attributed about 50.5% derivative, the figure may not entirely be true because since VAT is centralized in Nigeria at the moment, some of the VATs remitted to Lagos should actually have been remitted to operations of companies with headquarters in Lagos, outside Lagos. But because of the complications that the FIS experienced when the VAT was initially implemented in Nigeria, there was issues with how to mechanism for sorting out input, output VAT. So that was why it was centralized. So you realize that most of the oil and gas companies, most of the multinationals are into the consumer market industry. Even though they sell their products across the 36 of the 7 states in Nigeria, they actually centralize the filing of their VAT returns to Lagos State. So obviously the derivative figure for Lagos may not entirely be correct. Then another point is to look at the sharing formula, which is, I believe, one of the reasons some of the states, Lagos and Rivers in particular, are clamoring that they want to, be the one to administrate and collect VAT. Lagos is currently sharing about 14.7% of the whole VAT generation in the country, while Rivers is sharing about 2.7%. From their own point of view, from their own perspective, they believe that they are not getting a fair share of the VAT revenue, considering the amount of VAT revenue that is originating from their states. Then the northern states that are saying no, federal government should continue to collect. They believe they are benefiting more from the centralized system of VAT administration and collection. Now, diving into the implications. So, number one, for VAT system to work in Nigeria at the state level, we must get the basis for imposing the tax right. So there is what they call origination and destination principle. So origination principle means that VAT is charged where the goods or services is originated. So for example, if a company in Rivers State should manufacture a good or provide the services to another company in Lagos, Rivers the company would have to include River State VAT on its invoice to a customer in Lagos. That's the origination principle. The destination principle states that since VAT is a consumption tax, the intended the burden is meant to be borne by final consumer. So the place of residence should be the basis of charging VAT. That means the VAT laws in Lagos State should apply to that transaction since the consumer is resident in Lagos. Now, there could be complications where we have different principles, applied across states. So it could lead to double taxation. So like the example I gave, you could see a single company charging VAT from River State as well as VAT from Lagos State on a single transaction. So it will impact the cost of products in the market. Then how would the input-output mechanism be sorted? So if you see the VAT laws in Lagos, the VAT rate is 6%, while River State has maintained 7.5% that the FRS currently charge. So if a business should incur input VAT at 7.5% from River State, and the output VAT is 6% in Lagos, so who is going to bear the shortfall? Is Lagos ready to, give the business VAT refund, input VAT at 7.5% when it's realizing only 6%? Then you could see that some states would say, I can't give you the input VAT because the output VAT was not remitted to my state. So River State would have, VAT is charged at each level of production, each stage of production where you add value. So some amount would have been remitted to the River State government in this example that I'm giving. So River State may not be really willing to refund the businesses, given that the output VAT was not paid to their state. Then the cost of compliance. So you will realize that businesses would have to be filing VAT returns across all states. Then businesses would have to, deal with different states' board of internal revenue when it comes to VAT audits. So the cost of compliance would obviously increase. Then capacity of the states, to administer and, collect the VAT should also be considered. So you realize that for some states, the cost of compliance may actually be high compared to the revenue they'll be able to generate from administering VAT themselves. Then impact on non-resident companies. So how would the state's laws impact non-resident companies? Is it going to encourage them to do business with Nigeria? So the current VAT law in Nigeria requires non-resident companies to register and include VAT on their invoices. So a non-resident that have business dealings across all the states would then have to, there is no central point for filing their VAT returns. They would then have to start, complying in all the states. There may be negative impact on small businesses. The current VAT law we have exempts smaller businesses from filing VAT return if their revenue is, not exceeding 25 million naira. But based on the VAT laws of Rivers and Lagos that we've currently seen, no such exemption is applicable to smaller businesses. Then there will be further disparity in state wealth, and this will have impact on migration. I think Mr. Aruna has covered that point. So if states with lower derivatives and lower level of economic activity are left to,
Hello, Mr. Gali, are you there?
Yes, I'm here. Can you hear me? Can you hear me?
Yes, we can hear you, sir.
Okay. So I think Mr. Aruna has touched base on my last point when it comes to disparity. So we realize that the states that are currently wealthy will continue to, amass some wealth, while some states that have lower level of economic activities would struggle with revenue and would then see migrations from other states. And it would have impact on the ability of the richer states like Lagos to sustain, continue to invest in infrastructure to ensure that they provide the necessary amenities for business to thrive in the state. So it's in the best interest
Sorry,
of...
sir, you have like 2 minutes more.
Okay, so it's in the best interest of the state, Lagos State in particular, to allow the federal government to continue to collect VAT and to cater for other states. I know that there's a counter argument that once states have autonomy, to give them the ability to innovate and also try as much as possible to bring activities that are not currently in the tax net into the purview of VAT. So Mr. Arnold touched base on mining in the north in Zamfara, gold mining. There are also other mining activities, coal mining in the north as well. So we could see some other activities coming into the VAT net in those states, and they could actually prove us wrong. They can actually, generate VAT revenue that surpasses their current share from the common purse. So let's see how things pan out. Hopefully, based on the interpretation of the law, it's difficult to see the federal government winning at the federal level. Let's just hope that the state and the federal government can reach a settlement out of court, putting Nigerians first, putting businesses first before any other thing. That's my submission. So back to you, moderator.
Thank you very, very much, sir. It's been interesting. It's been an interesting conversation. I mean, engaging with you all guests today. It's been an eye-opener, basically. Quickly, before I ask a few questions here, let me quickly go to the chat box and then pick up just some few interesting points before we go into the question section proper. Mr. Gali, can you please stop sharing now? So quickly, Nurain is saying, Nurain is saying something here in the chat box. Say, is there a reason why Zamfara is not remitting proceeds of gold to federal government? I believe this is directed to Ali Issa, who made mention of that earlier. Also, Biodun Akimbo is saying, if states administer VAT collection, how will the impute VAT system work? Will VAT collection be appropriate under a residence rule, or should the law be amended to consider the state of consumption for the VAT collection? I asked the above questions. There are offices in Lagos, for example, that export their goods within Nigeria state, bringing the VAT to Lagos because their offices are in Lagos state. Administering VAT in Nigeria would be difficult without investing in technology. Thank you very much. I think Mr. Gali already made mention of this earlier when he was talking about the implication in terms of cost compliance. Thank you very, very much. Bukumi Olaniyon is saying, thanks, Biodun. That's one of the major arguments against the domestication of VAT at the state level. Another issue is if the VAT rates differ, which Mr. Gali talked about also. Anthony Eimoga is saying, hello everyone, this topic is apt. VAT ought to be controlled by the state. This will enable them have revenue to meet up with their responsibilities. The federal government will be relieved from bailing out states if states are allowed to collect VAT. Thank you very much. Well, I would allow any of our guest to address that. Bukumi Olaniyo is also saying, please present. Okay, thank you very much. So quickly, now, Mr. Emmanuel, are you here with us?
Yes, I'm here.
Fantastic. Now, I want to quickly address ask this question. You talked about tax and VAT issue, where you talked about tax evasion. Now, since VAT, like you since you said VAT can't or is difficult to be evaded, what can we do, or what can the government do to stop this tax evasion? What would be your recommendation? That's one. Secondly, how do you feel the gap between VAT and GDP? How can this be closed? Because I saw the margin and it was too much. There's a lot. It's more like you're collecting a lot and then it doesn't translate into anything positive at the end of the day, because your GDP still stands at the lowest, while your VAT collection is going up from 1% to 2 point something percent to 5 point something, then to 7.5%. I mean, it keeps going up, but literally it doesn't translate to anything meaningful down here. What do you make of this scenario? So these are two questions for you before I go to Alisa quickly.
Yes, I think your question is very, very interesting. Yeah, I would like also thank Gali for very wonderful presentation. So I will start to address your question from the last one about the variation between GDP and VAT.
Yes, please.
I may mention the answer is very easy, it's very simple. VAT, you cannot evade VAT because it's being collected at the process of production and at consumption. So now is that because our revenue is depleting. Oil, Nigeria's source of revenue, everyone knows, is crude oil. And again, so the prices of crude oil fluctuate. So government is being constrained about resources. So the only medium that they could touch and all dearly is VAT. So that is why this touch between the state and the federal government is an elephant.
So you mean government has total control over VAT, right?
No.
VAT.
I didn't say total control. I say the easiest means of getting revenue is through that VAT.
Okay.
So as you can see that data, so the rate of the tax, so every year they keep on like increasing.
So it's
right?
like the cash cow of the government.
Exactly. The low, so we call it the low-hanging fruits. That is VAT. So like what Mr. Gali also highlighted, VAT is the low-hanging fruits. But now, so you see the margin is dramatic. GDP is not, so it's not moving the same direction with the VAT. So that is a topical issue. So government have to rely on the low-hanging fruit, which is the VAT. Now, back to your first question about
tax evasion.
Tax evasion. Luckily, so that is what my research focused on. So because I look at the intersection between the financial research, data, and policy with regards to tax evasion, which is called the shadow economy, underground economy, hidden economy. So the implication is this: tax evasion in Nigeria is very difficult to deal with. There is difference between tax evasion and tax avoidance. So tax avoidance can be technically legal. So we can see that in the US. Even
that's true.
Trump is avoiding tax. And tax evasion is 100% you are not paying. I can tell you because Nigeria informal sector is around 67%. So Nigerian economy is driven by informal sector. So in as much as like what Mr. Gali presented, so in the federal law, so if your annual turnover is less than 20 million, you are being exempted from the tax, right? But because we have a lot of small businesses operating underground, I can tell you the number is very difficult to actually address tax evasion in Nigeria. Honestly, it's very difficult. It means that the only solution is to formalize those small businesses that are not registered, because there are some individuals, people invade tax in two dimensions. We have the household. In Nigeria, we have millions of households doing production in their homes. Government doesn't know them. If I show you this data, if times were around, I will show you this data, you will be surprised about Nigerian. And that is the issue, the correlation between GDP and tax and VAT gap. VAT is from consumption, so at the upper level, and production. So in as much as country doesn't produce the VAT and you keep on increasing VAT, the burden is 100% on consumer. So that is why Nigeria is number 2nd poverty capital of the world, because of our population. We don't produce, and there's a lot of VAT, and the burden is shifted onto consumer. 1 cubic of Maggi is 10 naira. Just within how many years I left Nigeria? So 1 bag of pure water that we produce locally, how much is it? 200 from 50. These are the implications of the VAT. So let me stop here.
Thank you very, very much for that very, very detailed comment there. Mr. Alisa, are you there? Alisa, are you there? Mr. Ali, are you there? Okay, while I wait for Alisa to come back to us, Mr. Gali, are you still with us?
Yes, I'm here.
Okay, fantastic. Now, you made some very interesting points, and I would like to draw out just a few points from there. How do you think the sharing formula can be harmonized? That's one. I mean, considering the fact that states like Lagos can generate as much as 40, 50 billion and get maybe 2 billion, while a state like, what's it called, Yobe, can generate less than 1 billion and get something like 2 billion, for instance. How do you think this disparity can be addressed? That is one. Secondly, per originating and destination principles, do you think the states clamoring for collection, for the collection to remain with the federal government, right? Do you think at the end of the day, maybe some of those states that are even clamoring for this revenue to remain with the federal government to continue collecting, do you think maybe at some point these indices might even favor them at the end of the day, considering the fact that there will be some part of the funds or revenue going to some of those states at the end of the day, because they produce some of those things and all of that? I mean, I'm looking at agriculture amongst some other of those issues. That is one. Secondly, per the implications in terms of cost compliance, right? Cost compliance. Don't you think this would jack up the amount of commodities entirely? I'm filing in Ogun State, I'm filing in Kogi, I'm filing in Kebbi, I'm filing in Adamawa. Don't you think at the end of the day, this trickles down back to the consumers themselves? Because once the commodities, the amount jack up, what would be the impact on the common man, considering the fact that wages and salaries are still the same? I mean, though labor is recently saying the previous minimum wage is too small, but I mean, there has been nothing concrete from the federal government yet. What do you think this leaves the common man on the street, or what would be the effect at the end of the day?
Okay, thanks for your question. I think I will start responding from your last question. In terms of, we have to see how the VAT laws assuming that the states win and they all have their VAT laws. First, we have to see how, in terms of rates charged. So you look at the rates across all states. So some states might think, based on their own level of economic activity, they think they need a higher VAT rate to generate a lot of revenue. While some other states might feel, okay, I don't want hardship on my citizenry, so let me charge less than 5%, maybe a 2% VAT rate. So when you consider impact on cost of commodities in the market, it depends. So if the VAT rate, the higher the VAT rate, the higher the price of commodities in the market, and the lower the rates, the lower the prices in the market. So then in terms of compliance costs, the compliance costs may not necessarily translate to high prices of goods and services, but it will impact the profit margins of companies doing business in Nigeria. So normally the cost of engaging tax consultants or employing tax accountants sits below the line. So you find it in the operating expenses as opposed to the cost of sales. So it's going to impact businesses as opposed to the prices of products in the market. Then sharing formula derivative. So I believe the first step is to take a second look at that derivative. I know the level of activities in Lagos, you can argue that is the highest. However, the revenue recorded as, or the revenue attributable to Lagos from VAT collection may not entirely be right. With the examples that I give, let me rehash those points. Number one, because most of the big companies, big players in the Nigeria sector have head office in Lagos. Their finance teams are based in Lagos.
Oh, right.
They filed their VAT returns in Lagos, irrespective of where, the activities that triggers VAT implication, irrespective of where they occur. So if you take a nursery that have that supply across the nation, if you take Cabri that supplies across the nation, they may centralize their VAT returns in Lagos. So they are not actually VAT that should go to the FI's offices outside Lagos are counted or attributable to Lagos. So that derivative, they need to revisit it. The FIs need to, let us have the true statistics. I don't know how they want to do it. Maybe as part of the online filing, maybe companies will then have to indicate which of the branches this belongs to. Since we are filing online, we can file returns, indicating the branch and the state where your branch is that generated that economic activity that led to VAT. So that's one. Number two, some other factors that are considered is population when trying to allocate VAT. I don't think anything can be done about that because the population figures are there. So there is nothing that can be done about that. I think the major one is trying to ensure that getting the derivative right in terms of VAT attributable to each state, then ensuring that you're fair in terms of allocation. So states that generate more should collect more, and that's what is currently happening. Lagos is collecting more than most other states, but I think they believe that what they are collecting is not commensurate to what they contribute to the purse. So fantastic. I think those two aspects should be looked into.
Okay, thank you very much. I mean, as we round up, because our time is fast spent already, I'll pick up the question that Biodun asked Akimbo. I just want to ask again, even though we got the feedback already from Bukumi Olanionu in the chat box. He says, if state administers VAT collection, how will the input VAT system work? Will VAT collection be appropriate under a residence rule, or should the law be amended to consider the state of consumption for the VAT collection, which I know you just talked about, but do you want to say anything about that again?
Okay, so the internationally recognized principle for VAT, and supported by World Trade Organization is the destination principle, because the purpose of charging VAT, like I mentioned, VAT is a consumption tax, and the intended person that will bear the burden of VAT is the final consumer. So
fantastic.
Yeah, so it is the residents, place of residence of the consumer that should be entitled to collect VAT.
Okay. Okay.
Yes.
Okay.
So if you deal in international trade, VAT won't be charged and paid to countries outside Nigeria based on the agreements reached with the World Trade Organization. So
okay,
destination principle is what is being applicable, but it's just a principle. States are not, mandated to follow the destination principle. But
okay,
if all states in Nigeria follow the destination principle, then VAT controversy will be minimized.
Fantastic. Thank you very much. Lastly, Mr. Emmanuel, are you there? Nurain is asking, he said, is there a reason why Zamfara is not remitting proceeds of gold to federal government? Because I mean, if I'm, for instance, there's oil in Bayelsa or River State or somewhere, why should it be a federal government controlled asset? Why can't the state own the oil in River State or in Delta State or Akwa Ibom or somewhere? Because Zamfara owns the gold in Zamfara State. So why can't I own whatever it is that is in Kogi State with me, for instance?
Exactly. Very interesting question. The interesting question still relied on the size of our informal sector. So those artisan miners, that is the gold, the mining sector in Zamfara, are being owned by the informal sectors.
Because
when you have time,
sorry to interrupt. When I hear 6 billion naira monthly, 6 billion
yes,
for one state in Nigeria.
Yes,
that is excluding the one that is going to come back again at the end of the day.
Okay, let me tell you something. So we went for evaluation at in Zamfara and part of KB State. You will see a lot of those artisan miners. They are super rich. Those guys, they don't pay tax. So that is why the central bank is supporting the state government to try to formalize those artisan miners. Those guys are in a small scale. Vis-a-vis, you can also find them in Plateau. You can also find them in Niger State. So many artisans. So central bank is now saying, in as much as we have those small artisans, and we are looking for the way to diversify our source of revenue base, can't we pump money, support those state government to formalize those guys that are doing informal activities? But the challenge still remains when the money comes. I work with national planning. Budget is in my office. And I can tell you how much the government is investing in states, try to support them to increase production. But I mean, it's so sympathetic. Those guys are super rich. They can't remit it to federal government. I'm telling you, they are like small individuals. And like what Mr. Gali said, we have a benchmark for VAT. So those guys, because they are in a small kind of clique, they don't meet the kind of benchmark. They don't meet it. And those guys are super rich. I'm telling you, in Nigeria, we have a lot of source of revenue, including VAT. And why VAT will always be an issue because of our purchasing power capacity. A lot of Nigerians doesn't have jobs. A lot of Nigerians are very poor and they need to eat. And we are talking about consumption. So that is why, take it or leave it, my viewpoint is to domesticate VAT in state level. Because when they do it, it will propel other states to actually catch up. See wonderful things that El-Rufai is doing in Kaduna. El-Rufai is trying to actually work investors. So when you go to around Zaria side, you can see new company. Imagine, this is what you talk about productivity. We need to produce to fight this depreciation of Naira is production. CBN cannot do anything apart from production. That is the only way you can fight foreign exchange. If we now begin to say, you are now beginning to, so trying to stabilize it, because if I tell you how much Nigeria stabilized dollar every month since from last 2 years, you actually cry for Nigeria. And this money is enough to actually equip our universities. We are talking, lecturers are about to go to strike, and we are spending billions of naira to stabilize dollars. Why? So these issues still remain. Tax, VAT will continue to be an issue. But I am part of the school of thought that believe that I disassociate myself from those school of thought that believe that it cannot work in Nigeria. It can work. Technology can work. Here in Japan, we have regional government. It's super easy. Every businesses at consumption, they have teller machine. So like what Mr. Gali said is to go back to the drawing board, look at it. Is the issue of the VAT. Import it into your receipt. So and when you make payment, everyone it's just like an alert. It will just alert. PM. Is it something difficult? It's not something difficult. So I don't think so.
I can see how paid you are already.
Let me just stop here. Thank you so much.
Thank you very much. Thank you very much. Lastly, last question before we wrap this up. Stephen Okeo is saying, well, I've learned a lot and still learning. Now, who gets to share the revenue from Lagos Airport and Apapa Seaport? Wow, that's a huge question. Who gets to share? I mean, Mr. Gani, do you want to say anything? Mr. Emmanuel, do you want to say anything? That's the last question, actually.
The ports are within the control of the federal government. So irrespective of where they are located,
they're still the federal government.
Yes, yeah.
Fantastic. Thank you so much, Mr. Gali. Thank you so much.
I think I would like to add just another quote which Mr. Gali said. I think is so the answer is very clear. So the port are controlled by the government. I'm telling you, we went to River State. So that is why the port in River State, Calabar, so it has been, so went to evaluate some programs there. I saw that deep water in Calabar or River State. I felt so sad. Look at in our state, Kogi. The project was awarded billions of dollars. Last 3-4 years, everything just stopped. Allow state to have even its dry land port. So Kaduna now, this man is doing a fantastic job. Now, El-Rufai is trying to initiate dry port. Do you know what that means? So since there's a rail that links Kaduna to Abuja to Lagos, is to move those products and kept them in the dry port, and there is revenue according to the state. That is what governor should be thinking about. So let state have their own port, either deep water or dry port. In Niger State, they have started 2 years ago. Now it's about. So
thank you. That's fantastic. I think it ties to what I wanted to ask Ali Issa when he was talking about creativity. I think if states are being creative enough, we shouldn't be having all this up and down we're having today about this VAT issue. If only states are being creative at the end of the day, that's just what it is. Thank you so much, everyone, for joining in on this conversation. Once again, this is put together by the Nigerian Global Affairs Council, which is a technology-based and digital media-driven public policy and evidence-based research think tank focused on policy concerns that revolve around governance and public administration within the Nigerian state and how we interact with the larger world. Once again, my name is Abraham Jononoja, the moderator for today's session. And for now, I would say bye for now. Let's quickly take the national anthem.
A Coca-Cola production.
Arise, O compatriots. Nigeria's call obey to serve our fatherland. We love and strength and faith.
The labor of our heroes past shall never be in vain. To serve with heart and might, one nation bound in freedom, peace and unity. Hey, that's so. Yeah, yeah. Oh, yeah, yeah. Arise, O compatriots. Nigeria,
Bye, everyone. Thank you so much, everyone, for joining once again. Mr. Gali, Mr. Emmanuel, we say thank you so much for everyone who joined in on this conversation. Stephen Okeowo, Jude Blaze, Chuku Dozie Ndubisi, Okpemi Omoyemi, Nurain, Muazu Alhaji Modu, Jovita Okonkwo, Fumilayo Adig, Elder Bukumi, Olaniyonu, Kelvin Odemeru, Tasiu Abubakar, and Tony Ayimoga. Thank you so much, everyone, and have a fantastic weekend ahead. Bye for now.
Astra, no. What you know about rolling?